So let's discuss 1DT trading and not being greedy when you do these type of trades.
Please subscribe to our channel. Have fun trading and manage your risk.
Let's say you had a $10,000 account, and I'm going to get some white space here. So you had a $10,000 account, okay? And if you made $200 off that 10,000 in a month, that would equal 2%. Okay? And if you kind of analyze that without compounding interest, you would have a 24% return on capital in a year. Right? That's not bad, right? 2 times 12 is 24. It's not bad at all, right? If you if you had that $10,000, right, and you wanted to get a 5% return on your capital, right? So that would equal about $500 a month, right? That would be 5%, and that would be about a 60% return on your capital in a year if you didn't have any compounding interest. If you reinvesting those profits each month and you can average 5% a month, you're going to have a phenomenal year because 60 is phenomenal. But let's, for some reason, with a lot of traders, we get super greedy when it comes to doing short-term trades. We look at certain small dollar amounts as something not worth our time, or it's something insignificant. But if you are going to be trading something short term, and in this case, we're talking about the 1DTE trade, if you're doing that every day of the week, or you're picking your days, and you're averaging $300 a week, $300 a week, so 300 times 4 is 1,200. And I clicked the wrong thing, so I apologize for that. But let's just put this here. Let's say we got the 1,200, right? And that would be a 12% return on your capital, right? Or without compounding interest, that is 144% in a year. Okay? And this is averaging $300 a week, or $100 3 times in a week. So it's 5 days a week. You can do a 1DTE trade. And I just say some days you lose, some days you don't trade because it's some economic news coming out. Like this Friday, we had the Fed Chair Powell speaking. So you decide, okay, I'm going to sit that out just to give myself the best chance to not have a huge move up or down. So over a month's time, you average $300 per week, and you do that over a year. Well, that's going to be 144% or 12% a month. That to me is insane, right? That's insane. All my years of trading, the best percentage I ever had in a year, and I'm still trying to relive that year. I had a 300% up year in 2012. It was just really phenomenal. It was just a lot of fun, and it was using other people's money as well. So it was really an exciting time. And and some people had returns bigger than that. I had a member, DeVale. When I first started mentoring DeVale, I seen DeVale have an absolutely astonishing. I forgot the percentage, but it was way more than 300% that he had. So 300% is great, but it's not out of the question, right? It's not out of this world. People have done that in a year before, right? But if you're trading conservative and you're trying the way I normally do with a bread and butter type of strategy, that is really phenomenal. I mean, it's nothing to sneeze at. But 144% is nothing to sneeze at as well. And so what I want you to kind of understand is that you don't need to get 12% in a month. Right? We were just talking about if you had a 10,000K account and you made $200 in a month, right? That would be 2%. And if you did that over a year, that would be 24%. Not bad at all. Excellent, right? Excellent. And if when we're saying if you did a 5%, right, that would be $500, and that would equal about 60% in a year. Right? So all of these are phenomenal, right? All of these numbers are awesome. All of these numbers can be life changing if you can consistently do something like this. Absolutely, right? But what if you only did, instead of trying to hit 12%, what if you only was able to get 6% in a month? Or if once again you were only able to do 2%, or you're only able to do 1%, it's still solid as you learn to build on your short-term trading or any type of trading that you're doing. You do not want to be foolish and be a greedy trader. Okay? We all suffer for it, or we all kind of have that greed in us, and we have to try to control it. It's like a beast that's trying to get out of us, like the hawk, I guess, the credible hawk, right? and but the more we can control it, the better. Okay? The more we can control it, the better, because the steady returns are going to be better for you over time. You don't want to be shooting for these 12% in a month consistently, because you're going to have these huge portfolio swings trying to get that type of performance. So looking at that, and let's say you have a $10,000 account, okay? And let's say you wanted to do a 1 DTE trade, and you're going to go to tomorrow. We've already looked at the economic information, and it's no economic news coming out tomorrow that we deem is going to be market moving. Doesn't mean the market is not going to move up a lot or move down a lot, but it's no economic news that is known that we think is going to move the market in a significant way. Okay, so we decide, okay, we have a green light. Let's try to put this trade on and be as vigilant as we possibly can be. So you have a $10,000 account, and if we start on this call side, and let's say we're looking to do a 20-point wide spread, and let's go to this 6 delta here on the call side first. Do a 20-point wide spread. That's $60 right there. Right? 1 DTE, $60 in one day. Okay? And then we go to this put side, and let's say we decide we're going to do this put side at a 6 delta as well, and we do a 20-point wide. So now we're getting $100. Okay? We're getting $100. So if we only did this, and let's say we held it to expiration, and we only did this 3 times a week, and we were able to win that, well, that's the $300. We only did it 3 times this week. Well, that's the $300 that we were talking about that can be that 12% in a month. But what if you decided to do something even more conservative, even higher probability than this 88%? Okay? The TastyTrade is saying you got an 88% chance of winning at least 1 cent at expiration with these probabilities. What if you had a higher probability? Okay? So let's break it down. So let's look at this expected move to kind of break down this before we kind of move more into kind of seeing if we can be more conservative. So this expected move is plus or minus 18. Let's round that up, and let's just say it's 20. Okay? So 2 times that expected move would be 40. Okay? It would be 40 points in each direction. So if we took this number here, and we took the 41.35 and we added 40 to it, that would take us to 41.75. So that's 2 times the expected move on the call side. Now, if we did that 40, if we subtracted that 40 from the 41.35, and that would take us to 40.95. So we're further than 2 times the expected move on the put side. So this is nice, right? This is nice. You're getting $100 if you can get filled. Right now, it's actually going for 105. So this is great. But what if you wanted to be a little bit more conservative? And you decided, okay, well, this is now a 7 delta, is 2 times expected move. Let me put this over here at a 5 delta again, and then let me move this put side over to a lower 5 delta, just for illustration purposes here. So now you went from 105 to $75. $75. But let's just say, just for easy math, you kept all of this $75 and you did it 3 times in a week. 75 times 3 is 225. If you just did that in 1 week, if you did that just this week and decided not to trade anymore, you already made over 2% for that month, okay, off your $10,000 account, right? From your 10K account. That's not bad, right? That's not bad at all. If you did that 4 times, then that's $900. You almost got 10% off your monies. And so what I've been trying to pitch to you guys is that the short-term trades, they're attractive, and they kind of specialize in focusing on our greed. As humans, we have this greed inside of us, and I think selfishness and greed, that's all, is places for it, right? But you have to understand that it's not the only way to make money, and that the short-term trades are the most dangerous way to make money, right? Because in translation, they can make the most. I just gave you an example. If you can make $300 a week, and with the short-term trades, which is not out of this world, it's not like impossible, right? I just showed that you can have a high probability of doing this, winning on this trade with just 1 day to go, right? And if you can do that and manage your losses, you can have some extraordinary returns. But on the flip side, you can have some really devastating, lose all your money in your account type of stuff if you don't know what you're doing. So you don't want to be foolish. You don't want greed to make you foolish. And so in this case, we can still get 75 cents if we did this trade. And the call side is the issue at this point, right? And if we look at it and say, okay, 40 points again, if we take the 41.35 plus 40, that's going to give us 41.75. So we're still 2 times the expected move on this call side. Can this go up more? Absolutely. Can we go up tomorrow more? Absolutely. And if we look at this percentage wise, we take that 41.80 minus the 41.35, let's just say, divided by the 41.35, that is a 1% move. The VIX is basically telling us it's going to be a 1% move up or down. If we take that VIX and we divide it by 16 from the rule of 16, so you take the 1722 divided by 16, that's giving us 1.07% return to the upside, so basically 1%. And the put side, we know it's going to be more than 1% because we were further away on the put side point wise, so that means it's going to be further away percentage wise. If we wanted to, we could move this put side up and say, all right, now we're going to get a little bit more. Instead of 75, we're getting 80 if we can get that 75. But let's just say we keep that put to where it's at. And now you can see the market has dropped a little bit to the upside. But let's see if we can get this 75. Okay? We're going to send this and we're going to give it about 5 seconds. And then we're going to adjust the put side, because the put side is going to be more than 2 times the expected move away. Okay? So we said the expected move is 40. And if we go to the straddle price here, the straddle price is actually 21. So if we take 21 times 2, that's going to be 42. And if we track that 42 from the 41.34, that's going to take us to 40.95, or excuse me, 40.92. And we're still going to be further away from that if we go to the 40.80 on the put side. So, and I think we're good on that call side. So what I'm going to do, we didn't get filled. So I'm going to go back and look at this working order. I'm going to cancel it. And you can argue that, okay, maybe you should go to the 70 cents and you'll get filled and you stay further away on the put side. And so you look at this and you say 70 cents. I'm going to send this so we don't lose the 70 cents perhaps. And we're going to lose that 70 cents. So we're going to have to adjust this put side here in a second. So they gave us the 70 cents. All right, so perfect. So we got filled. And so what I wanted to explain is that the buying power that they were requiring, we had 70 cents over, let's just say 19.30, right? That was the buying power that they were requiring. So 20-point widespread, $100 a point. So that's 2,000 minus the credit we receive is 70. So that's the 1930 that they're giving. Just the basics of options there really quickly. So if we take that 70 and we divide it by the 1930, that is a return of 3%, 3.6% in 1 day on the return of your capital. So that's not bad in 1 day, because once again, if you kind of extrapolate that over a week or over a month, it can be some phenomenal gains, and over a year, phenomenal gains, right? Don't worry about that max loss, but people do have that max loss because what happens is that they get into these trades being foolish and they don't know how to get out or don't have an exit plan when something starts to hit them in the mouth, right? It's that old Mike Tyson saying, everyone has a plan until they get hit in the mouth, right? So and but you don't want to be that way. You want to know exactly what's going to happen if this starts to go against you.